What is going on, my good old friends of YouTube? It is your boy Stas here. Welcome back to another video. So you saw the title of the video. We have to go over 3 stocks that I'm going to buy. I am going to buy these guys, I promise, once the price is right. Once the price is right, I will buy these. So without further ado, sit back, relax, take a sip of your coffee. If you guys find value, all I ask is to hit that like button and subscribe. And if you haven't gotten your stocks yet from Moomoo and from Webull, get your 10 stocks from Moomoo, link down below, with a $100 deposit, and your 12 stocks from Webull with any amount deposited. And with that being said, cheers guys, let's dive into the video. So stock number 1, let's just dive right into it, is Adobe, ticker symbol ADB. And by the way, in this video, we're going to break down charts and we're going to break down some financials. We're going to look at the numbers a little bit under the hood, as I like to say, of the company, right? You know how you look at your car, you pop the hood? You got to do that with companies as well, guys, to see if they are good investments or not. You got to do it. You got to do it. So without further ado, again, let's dive into the video. So Adobe is number 1. And this is a stock that if I pop up the 3-year chart, you guys are going to see it is down a decent amount. At the time that I'm filming this video, it's down from $700 to about $440. It is down about 37%. And you might be looking at this like, wait a second, Stas. It is down 37%, and you're telling me it's not a value right now? What are you talking about? Well, guys, listen, just because a stock is down 20%, 30%, 40%, 50%, it doesn't mean that it's a value. A stock could go from $100 to $5. It goes down 95%, and it could still be a crappy stock that you should avoid. Just because a stock goes down doesn't mean you have to go buy it, and just because it goes down doesn't mean it's undervalued, right? So what you have to realize is a lot of stocks during the 2020-2021 run-up, they got way too extended on the upside, to the point where even, 20, 30, 40% drawdown, which is what we have now on Adobe, even that, which happened, right, it doesn't bring the stock to an undervalued spot, which goes to show how overvalued the stocks were. A lot of stocks were, in 2020, 2021, and some are still right now. So for me, Adobe is a fantastic company, excellent company. I use the products. I think it has a great competitive advantage, economic moat, they're growing, yada, yada, yada. But you have to realize price is what you pay, value is what you get. So with Adobe right now, for me, it's a little bit too expensive. I would like to see it anywhere from, and I've said this before on the channel, it was a while ago, I haven't really talked about Adobe in a while. I would buy it in the low 300s. I'm talking 300, maybe 315, preferably in the 200s, 250, 275. That was my price range. I'd say between, realistically, 250, 300. And we almost got there a couple of, 2 months ago, roughly. We almost got there. We hit about 330, 335, but clearly we didn't get to my price target. And with price targets, guys, for me, I'm pretty strict. I'm strict with my price targets. If it doesn't get to this, I'm not going to buy it as a long-term investment. And in this case, I did not buy Adobe. But best believe, and let me pull up the financials here, guys. Best believe if Adobe gets back to, at some point, 250, 300, 275, I will be initiating a position 100%. Look at it right here. At this point in time, it is $440, like we just saw, and the market cap is $200 billion, and the price to earnings ratio is over a 40. I mean, come on, guys, a 42 trailing 12-month price to earnings ratio. That is a little high in my opinion. I would like this near the lower 30s, preferably in the 20s, which you guys might be like, oh, you're crazy, Stas. That's not going to happen. I don't know. It might not happen, but if it does, I will be ready to buy Adobe. I'm telling you guys, I've been waiting to buy the stock, not just for a month or two here, a couple months. I've been waiting for a long time to own Adobe. Probably a couple of years, to be honest. I just never got the chance. And who knows, maybe it never goes down to 330 again. It might not. And I might be out of luck. Time will tell, guys. Time will tell. So if you look at the revenue very quickly here, let me make sure you all can see me. Yes, you can. Make sure to hit that like button if you are finding value thus far in this video, guys. Right now, revenue is at trailing 12 months about $16.7 billion. And look at the growth from 2018. In 2018, they did $9 billion. 2019, they did 11.2 billion. 2020, they did almost 13 billion, and 2021, they did almost 15.8 billion. So they're growing, they're not doubling every year or anything insane, but they are growing at a nice clip. We're talking 15, 20%, 25%, depending on what year, time period, obviously, you're looking at. And trailing 12 months, they're just about 16.7 billion. So they're still growing revenues, right? And into the future, of course, I believe they will continue to do that. But again, price is what you pay, value is what you get. So we have to wait for that right price. And I also like looking at the balance sheet. Let's do that very quickly here, guys. Let's see total assets over current assets rather over current liabilities. So let's do that very quickly. I like doing that. So current assets, 8.7 billion. Nice. Current liabilities, 7 billion, meaning with their current assets, they could liquidate this money quickly, right? Current assets, they can pay off all of their debts that are due within the next 12 months if they wanted to. If they were to do that, they can do that if they wanted to, which is great. I like seeing companies that are able to do that. So I don't want to spend too much time on each stock, guys, but balance sheet, quick glance, looks decent when it comes to total assets, total liabilities, and of course, income statements growing. The company's profitable. You guys should know that. If you didn't know, they are profitable. Now let's talk about the second stock. The second one is Chipotle Mexican Grill, ticker symbol CMG. This is another one that I've always been like, I wouldn't mind owning Chipotle. You know, I've always thought that. I don't know if I've mentioned it many times on the channel. I probably have. I mean, I've been doing YouTube for a while now, guys. But Chipotle's always been one that it gets close to a point where I'd buy it, and it just runs away from you, and it runs away from me. I'm not telling you guys what to do. It runs away from me. And look at this. It started coming down. It went from 1950 to about 1200. So it did lose 40%. But as the overall markets have recovered here over the past couple of weeks, so has Chipotle in a major way. From 1200, now it's pushing 1700. So this is definitely overvalued, in my opinion, and I'll show you some numbers here in a second, but we've already rebounded off the lows so aggressively. Now we're almost at all-time highs again. This is one that I'm not buying today, but for sure at some point, if the price gets right, I would be a buyer, and that would be anywhere, probably, it might be extreme, but from what I remember, my calculations, 650 to 725, 750, I'd be looking to buy Chipotle, so it's got a long ways to go down. I mean, maybe that's a little bit too conservative based on assumptions, but it's got a long way to go down. And you guys can see here, the market cap on Chipotle is about 47 billion. And maybe, I don't know, maybe $500, 600 is a little bit unrealistic considering it's at 1700. But if this were to get near maybe 750 to 900, 1,000, that would be a more realistic. But if we're being crazy, you know, penny on the dollar value investors, you know, 400 or 500, that'd be dirt cheap for this company. But more realistically, 750 to 1,000, I would say. And the market cap now is 47 billion. Like I said, earnings per share last year, trailing 12 months rather, $27. All right, nice. They're profitable. And the PE ratio is over a 60, which is just insane for the trailing 12 months. But if you look at the financials here, guys, you will see some nice growth. But in my opinion, not enough to justify that extremely lofty price to earnings ratio. I mean, it's just way too high. You can see in 2018 they did 4.8 bill revenue. 2019 they did 5.6. 2020 they did about 6 billion, and then in 21 they did 7.5 billion. So in 2018, 19, 20 they didn't really grow much in that 3-year stretch, but then 21 hit, and then they got that big pop in growth to 7.7 or 6 billion revenue from 5.9 in 2020. So nice growth, but not enough growth to really justify that price to earnings ratio. And in my opinion, if you're buying Chipotle, I don't want to ruffle any feathers or piss anybody off, but it's not a good idea here. As a long-term investment, as a trade, go ahead, do whatever you want. But in my opinion, as a long-term investor, not the best value here at all. And the last one's NVIDIA. We might as well start off here and talk about the numbers, then look at the charts. We'll shift it up for this third stock, guys. NVIDIA is way overvalued right now, in my opinion, 100%. I've said this time and time again, and when we look at the chart in a second here, you'll see, kind of like I said with Adobe, when we saw that big run in 2020, 2021, a lot of these stocks got so stretched to the point where even if they were cut in half, they're still ridiculously overvalued. In fact, that's what happened with NVIDIA. It got to $360, I believe. It cut in half. Now it's at 180. It is still overvalued. That is the insanity of the current stock market that we're in. Sure, some stocks are at good values, which I believe there are some out there right now, but some of these valuations are nuts. NVIDIA is, for sure, in my opinion, nuts. Not as bad as it was, but still pretty lofty. I could be wrong, but just in my opinion. And we can see here right now, 455 billion market cap, massive company. We have price to earnings ratio just under a 50 for trailing 12 months, a little high in my opinion, and $3.75 earnings per share. And let me see what their price to sales is. I didn't do this on the other stocks, but it's all good, guys. We'll look at it here quickly. Price to sales is a 16 on NVIDIA. I mean, come on, guys. I mean, they are growing nicely, top line, but I mean, it's not worth that type of valuation, in my opinion. Really, look, in 2019 they did 11.7. All right. 2020, they did 10.9 billion. Okay, in 2021, 16.7 billion, very nice pop. And then in 2022, now they're crushing it for sure, about 27, trailing 12 months, almost 30 billion. So they are growing very nicely, 100%. But did you not see that they issued a warning recently? Was it a profit warning? Some sort of warning. Micron did as well. These companies might be facing heat in the short term in the next couple of quarters, to the point where we might see that stock price go from 180, maybe even to 150, 125. And my buy price on NVIDIA is in the lower hundreds, 100, 125. That's where I'm looking at it. And let's see the balance sheet very quickly. And now that I'm thinking about it, I forgot to look at Chipotle's balance sheet. We'll go back to that. Right now, total assets, total liabilities, let's see. I want to see current over current. Let's see. Current assets, it's the current ratio, right, guys? Current assets, $28.8 billion right now for this company. Current liabilities, $4 billion. Oh, my goodness. That is awesome. Yeah, that's what you want to see. So their balance sheet is 100%. I mean, it's great. Great balance sheet. But, again, you got to watch out what you pay for these companies, because long-term, that really dictates your return. Your return isn't dictated by, I guess, the quality of the company. I mean, in a way it is. Yeah, it is dictated by the quality of the company. But let's say you buy Apple at all-time highs at $180 a share or whatever. I mean, are you going to do better than somebody that bought Apple at $110 a share a couple months before? No, you're not. I mean, you're just not. You know, price is what matters, but of course the quality of the company as well. The idea is to get a quality company at a great price, which is what I'm trying to do here, right? So great balance sheet for sure for NVIDIA. And before we wrap the video up, let's go to Chipotle, because I forgot the dang balance sheet. We cannot forget the balance sheet here, guys. Let's look at Chipotle's balance sheet, and I haven't done it in a while. I don't even know. I couldn't tell you. So total assets right now, right around, or current assets rather, $1.4 billion. Their liabilities might be more. Let's see here. I have a feeling. No, current liabilities, $870 million. So their current ratio is solid. Assets, current assets over liabilities, more assets than liabilities. Not too bad. So let's shift back over here to ThinkOrSwim and quickly look at NVIDIA's chart. So what we're seeing here is, and I was wrong, by the way, it didn't hit 360, but it got awfully close, and it's down almost 50% from that, almost 360 mark. It's more like 40%, 45%. But overall, look at that chart, guys. It got very extended, and that's what we get. And we'll wrap it up here. That's how typically crazy euphoric bull markets go, and it works on the bear market side as well. Let's say we get a gnarly bear market, the stock market continues going down, we're going to get stocks that get way oversold to the point where they're way undervalued. Just like we have stocks that got way overbought to the point where they were way overvalued. It goes both ways. But, long term, especially if you're looking at VOO, S&P 500 ETF, if you're averaging in on this, I get this question sometimes. Stas, should I buy at all-time highs? Should I just buy the dip only? You should buy bi-weekly every week no matter what. That is what has worked historically, and the numbers prove that. You can't dispute that. So you got to buy every week, right? Every 2 weeks. VOO, and I'm talking about index funds here, not individual stocks, index funds. So with that being said, guys, that's it. These are 3 stocks that I think are overvalued that I will be buying when the price is right. So if you all found value, hit that like button, subscribe, get your 10 stocks from Moomoo, each up to $2,500 with a $100 deposit, and your 12 stocks from Webull with any amount deposited. All those are linked down below. And with that being said, cheers, guys. I will catch you in the next video. Thanks for watching as always. Peace out.